You're listening to Biotech Hangout, a live and unedited weekly discussion of all the latest news in our industry with a group of biotech insiders. I'm Chris Garabedian, and my co hosts today are Brad Loncar, Eric Schmidt, Paul Matteis, and Tess Cameron. For more information about our hosts and guest speakers, or to listen to the most recent episode, please go to biotechhangout.com. So, it's never a dull moment these days in biotech. Um, let's start with the markets. I mean, it's been a roller coaster week, to say the least. I know some of this was talked about on last week's, but it's continued into this week. And um, so Brad, maybe do you want to just frame this in terms of how you're seeing the markets, and then I wanted to go to Eric on kind of the fund dynamics.
Yeah, I mean, obviously, as everyone knows, it's a roller coaster, and it all kind of came to a head when the White House paused the increases for 90 days for like everybody but China. And that day, the markets rallied. The Dow was up like 2,500 points, but it was weak yesterday, and it's weak today. And I think one thing for people who don't follow markets, like one thing to note that I think matters a lot is that bond yields are rising, and that's pretty concerning. Actually, you would expect the opposite because, like during volatile times, the U.S. is usually a safe haven, and especially fixed income. And the fact that the dollar is weakening and those bond yields are going up suggests that people are uninvesting in the U.S. and taking their money elsewhere. And if that's a long-term trend, obviously that would be very concerning. And I think there's not to dive too deep into politics. I know there's a lot of people that are against the tariffs, and there's people that see value in them and everything. I think one thing that probably most people would agree with is just the suddenness of all of this. And the U.S. has always been like the steady hand in terms of like financial markets and a place to invest your money. And so I think that one thing to watch closely is the fact um, that all of this has been so abrupt and whiplash and everything. If people start pulling their money from the U.S., not necessarily even as a directional bet, just because it's not as steady and the rules of the game aren't as aren't as durable as they used to be. That would be a very bad sign for the financial markets, and ultimately that all trickles down and affects every sector, including ours.
Yeah, absolutely. Well, Eric, I mean, biotech is unique. It's driven a lot by specialty funds, specialty managers. They're not going to go away. It's their raison d'etre to invest and follow biotech. But people who have money, right? They allocate differently, and that can, they can choose not to invest as much into biotech. So, what are you seeing in terms of kind of what's happening at the fund level?
I like Brad's comment that, kind of the rules of the game are shifting, right? I mean, literally the earth is shifting underneath our feet, whether we want to admit it or not, within biotechnology today. We've got these massive changes at the FDA. Certainly that agency is going to be very, very different from what we thought it might have looked like just a few months ago. I'm sure we're going to talk more about that, Chris. We've got potential for tariffs. We've got potential for economic downturn. We're seeing lack of funding at the NIH and more broadly scientific levels. So what we thought was the game from an investment standpoint before is no longer the game. And this week, for example, and if Paul's joining us, I'm sure he will vouch for this. All of our incoming calls from biotech investors had very little to do about specific companies or timelines or data points or individual stock outlooks. They had everything to do with the macro, right? Everyone has suddenly had to put their macro caps on and become an economist or a political scientist or an international tax specialist. We're all doing things that are probably way outside of our swim lanes and make us very uncomfortable. Hopefully, we'll survive, over a period of time by doing that. We need to adjust. We need to react to the earth that is moving. But none of us really like doing that. That's for sure. And of course, when things swing this bad, the conversations often turn to, okay, who's not going to survive, right? I mean, for better for worse, this sea change that is happening on Wall Street is going to leave certain funds unable to continue, certain companies unable to raise capital, probably certain sell side shops as well, unable to support their teams of analysts and bankers. So, this industry is probably shrinking as we see it right now. Maybe again, we're slow to appreciate it, but if this keeps up for much longer, I think the shrinkage will be very dramatic. So, unfortunately, I know that's a bit of a downer to start today's discussion, but that's kind of the tone of Wall Street. Paul, did you want to chip in on that?
Yeah, I mean, I don't disagree with anything, Eric, and I have a little anecdote from this week that just puts in perspective how hard it is to be an investor right now. I was in San Francisco doing meetings, and each meeting it opens up with the same sort of 10-minute just sigh of how much of a bummer this market is, and then about 45 minutes into one of them, we're all looking at the TV that's about 30 feet away in the lobby of this office, and we're like, is that the Nasdaq up 8%? And this guy works at a hedge fund, feels like he has to go run back to his desk, right? And so, I mean, just think about that for a second, right? I mean, obviously, it has nothing to do with fundamental companies or this. It's just the market swings. I think are making it really, really challenging for people. I mean, Eric, I'm definitely trying to entertain the kind of conversation with people of what types of stocks could do better in this market. I mean, I think we saw in the couple days after the Peter Marks news this sort of semi flight to safety of, okay, I want to own stuff that's commercial or late stage, and then I mean, well, that feels like it became a very short term consensus trade quickly. I do feel like there's going to be certain types of criteria that investors are going to be more stringent on with small stocks, right? I mean, just talking to people about, if the company has a catalyst, like, that's got to be a data catalyst in this market that really disproves one or two bear cases and is truly value creating, right? Like nothing proof of principle. I want something that is firmly proof of concept or firmly de-risking, or, companies that have been platform companies and burning a lot of cash. I mean, I think you can be this spiral where the cash needs are high and then the stock goes down and then the implied dilution is greater and then the stock goes down more. And so I'm finding investors being more sensitive to those types of names. I mean, the tariff piece makes the whole flight to commercial biotech more challenging because in my discussions, no one even has any idea how to model this kind of stuff right now. But this is just a window into these conversations I've been having, which oftentimes don't have a good answer.
I think, Paul, just to pick up on one piece that you said, which is, clear catalyst, and I think we're also seeing a change in like what is a catalyst, right?
Right.
And I'd be interested in thoughts from others, but like, what is a catalyst? Because, I think there's very little, there's very little forgiveness for even any like minor kind of like confusing point in data, right? Even if it's something that's really explainable and very logical. And I think that could understandably create a lot of anxiety for companies about like, oh my gosh, well, like what does that mean in terms of how you're thinking about upcoming data and what you should what you should release. I mean, I think our days of kind of like individual patient level data coming out in quick succession, that would not play well in this market, right? And so I think it does really kind of tend towards companies being in a position to ideally release pretty full robust data sets, right, and really being able to contextualize those appropriately. And even if you do and there's anything that's imperfect or difficult to explain about those data sets, you want to make sure that like you're talking really, really closely to your top holders, right? Because there's not going to be a lot of forgiveness from people who aren't super close to the story and willing to, kind of bear through some of those imperfections, even if they're not fundamental.
Yeah, Tess, that's a good point. I know we're going to cover Lexeo later that might kind of speak to this point a little bit with their data and the stock reaction. But I want to bring it to a little bit to the private side. So Bruce Booth put a blog. He's always very timely with his blog posts in terms of highlighting that, despite, all the uncertainty, all the challenges that we're facing, that this could be the best time to really focus on new company creation. We hit, kind of a 10-year or more than 10-year low in terms of new company creation. But this also is counterbalanced with the fact that we've got more dry powder than we've ever had. There's been more fund closures. There have been articles about, just funds closed in the last few years as more than $35 billion of capital to be deployed. And so we're still seeing private deals. But it was a little bit of a controversial take to have a silver lining perspective on this. And if you take a strictly long-term view, it makes sense. But at the end of the day, VCs, they have to exit, and that means they have to get to data sets that will either elicit acquisition or uh, they'll have to be patient with the IPO market. And presumably, if you have more data in our clinical stage and further along, it'll be easier to do an IPO, if the window's healthy and open. Um, but it's not stopping these VCs. And look, I run the VC funds for Perceptive Advisors, a multi-stage public equity investor. And we have to deploy capital, right? We have an investment period. We've raised a lot of money. When we do capital calls, we need to pick our investments. So when you see these billions and billions of dollars that have been raised, they have to put that money to work. Now, they don't have to put it into newcos. They can invest in Series Bs and Series Cs and Series Es. Um, but I think the idea is, hey, this could be a good time to invest in new companies. Now, uh, I read Bruce, full blog. I don't always have the luxury of reading Peter Kolchinsky's blogs because they're pretty long, Tests, and I know you help a lot with those. But Bruce has more than a bite size. But I think one of the issues that I think is at play here is on the venture side, we have to reverse engineer on valuation. And you really are pegged to comparables in the public markets. And until we start to see the public valuations of biotechs get healthier, it's hard to reverse engineer, how is everybody going to make money along the way from the seed investor to the Series A to the Series B to the crossover investors to the IPO investors, and that gets really challenged when valuations are not healthy, and particularly so. Bruce was making an argument for discovery, and I think the economic model gets further challenged with discovery. Now we're all happy when we see the likes of Flagship, and companies that go into early technology. Arch has more of a business model, you know um, platform play versus technology platform that Flagship likes to do. But those require a lot of capital to de-risk to get something ready for the clinic. So I do think you're an ecosystem that is very reliant on these public equity valuations and the IPO window. And I think that we really need to see some signs of life of that. And I think we're at peak uncertainty right now. But there are private deals still happening. One of them, we supported Merida, which is in the Graves' disease, thyroid eye disease test. I know you guys had a Series B that was an RA company, Imbria, in the hypertrophic cardiomyopathy space. We saw some other deals, Neurona, later stage Atsena, later stage Raythera is another Series A over $100 million. So we definitely are reading that, money's being deployed on the private side, but I think, we're all pretty anxious about when will those exits come? What do we need to show to have an exit? I don't know, any further comments, Tess, coming from the private side of RA?
Yeah, no, definitely. I think everything that you said makes sense. I think a key point for funds that are deploying both public and private capital, right, is that the opportunity cost of that private capital went up pretty significantly with with the market drawdown, right? So as you say, I think every fund, whether you're exclusively private or a mix of public and private, it does kind of shift the bar in terms of that private capital deployment. And I think something that we'll just have to watch is like, how does that shift the type of new formation that we see, right? And how much does that involve, kind of starting from scratch versus, we've seen a lot of, asset in licensing, and I do think that, like, for any new codes that are starting from scratch, it's a very different profile of the type of new code that was started from scratch a few years ago.
Hey, Chris,
Uh,
I just want
yeah,
to quickly
please.
mention too, in terms of like what can smaller companies do, I think there's another option out there that's been around for a while, but is really going to be at the forefront over the next year or two. So I was at a conference this week and I did a bunch of interviews, and one of the most eye-opening ones I did was with one of the royalty companies. Like everyone, of course, knows Royalty Pharma, but there's a lot of like mid-size and smaller players in that space, and their phones are ringing off the hook right now. And with the IPO window closed, and if you're not getting like a big pharma deal, another option for smaller companies, even in earlier stages of development, like this is no longer just a business for somebody that has like a phase 3 success or is already commercial and is trying to monetize it or something. There's a lot of these royalty companies that will take some development risk and invest in an asset early on in development, for future royalties. And it sounds like they have lots of cash available right now. And so if I was a smaller company trying to exhaust all options, I would look at that too. And I think we're going to be seeing a lot of those types of announcements over the next year and a half.
Yeah, Brad, I mean, just to follow up on that, I mean, it reminds me a little bit of venture debt, right? And Silicon Valley filled a goal there of kind of, less de-risked company for venture debt. And so on the royalty side, when there's no clear clinical proof of concept evidence, is it that they're just getting better and better deals, and so it's a numbers game where they're willing to take a bunch of zeros? uh because usually you see that more in play when something's de-risked, that okay, this has a higher than average likelihood to get an approval. We can do our probability adjusted cash flows on this based on the clinical data. But when you go pre-clinical proof of concept, how are they managing that risk?
Yeah, I mean, they're just investing like a hedge fund would in a stock. They're doing the same thing in individual programs. And I think that makes a lot of sense. I think for a long time, like literally decades, various people in our industry have tried to figure out like vehicles that you could create to just invest in an asset if you don't like love a whole company. And I think that's essentially what these folks are doing. And another really interesting thing that they're starting to do is, look, we have too many companies out there. Like everyone knows the negative enterprise value problem. There's good companies out there that are experiencing that, but there's a lot of, I think Adam coined the term zombie companies that for the overall health of our industry, like they all need to get cleaned up. And the royalty companies can do that very efficiently in a way that like gives cover to like the board of directors of these companies, so they could basically acquire them, distribute the cash to their to the shareholder base, and then still for all of the preclinical or very early clinical assets that were still left in these companies, then they have something to eventually license out if anybody wants to like, pick it up and continue to develop it. But yeah, it's just they're investing in programs like, and taking risks just like
Yeah.
we all have in individual companies in the past. It's just a more like microwave investing in the sector.
Yeah, I think you need that critical mass. It reminds me of seed investing, where you know that a majority of will probably fail and never get to an exit, but you're hoping that the few that you do bet on. So yeah, it'll be interesting to watch
Yeah.
that trend.
Yeah, and I think maybe just one comment, because we have some of our portfolio companies, including some, primarily later stage companies, have, done those royalty deals. And it's so important to think through the nuances or understand the nuances of them, because I think, Brad, what you're talking about is, royalty deals that are a bit more like equity, right? Where you're basically taking assets and you have upside in those assets and you have downside in those assets. Sometimes the way that these deals get structured, especially by some of the bigger players that also do a lot of debt deals, is the royalty deal is basically debt, right? So company wins, royalty, company wins to a certain extent, usually with a cap, but company loses, they still got to pay back the, royalty, the royalty payer. So it's a really interesting concept. I think one that would have to be deployed with that kind of concept of, upside and downside in mind.
Yeah, great point, Tess. All right, well, look, the markets, I think every week we're going to be monitoring this touch and go, both public and private. But, FDA is a big part of that and what's happening at the FDA. Eric, you want to kick us off on what's the latest week and any perspectives further just with all the changes that we've seen?
Yeah, I mean, obviously, from a macro standpoint, this week's stock weakness probably had a lot more to do with tariffs and the threat of tariffs more broadly and on biopharmaceuticals than on anything else. But the FDA discussion that arose and came to the fore last week with Peter Marks's dismissal, in the background, at least, that continues to percolate. This week, for example, we saw a number of former FDA leaders, including Janet Woodcock, come out very vociferously against the change and very fearfully in terms of what might transpire going forward. She wasn't the only one. Of course, we continue to hear RFK Jr., our Secretary of HHS, make comments. I think he went on TV and essentially admitted that he's been interfering to a certain extent with COVID vaccine approval from Novavax. And he said some untruths about that vaccine and about single antigen respiratory vaccines in general that are just not correct. So that was a very disappointing revelation this week. And then, we're starting to at least see Dr. Macri, who's the current FDA commissioner, come out and begin to maybe institute some of his agenda. It was a very, very minor pilot program that he put forth on preclinical testing. It's an initiative that's been going on at the FDA for now many months, and he maybe brought it to the fore. But perhaps he's starting to begin to establish his presence there. So lots of changes. I think in terms of the investment community, we're still very anxious here. We think the FDA is, for the most part, hanging in the balance. I don't think there are too many of us that already are willing to say the FDA is truly, truly broken, but I think a majority of us do think that there is severe damage that's been inflicted on the FDA, and that damage will probably continue to be inflicted on the FDA so long as the leadership in our government is unwilling to stand up for science, is unwilling to stand up for an independent drug review process, is unwilling to protect the non-political appointees, giving them freedom to make scientific judgments. So, that's a very tenuous position, and I'm curious to hear how others have reacted to this week's news.
Maybe I can chime in, Eric. I mean, I think from like a societal perspective, like I agree with everything you're saying, and we talked about it last week, right? I mean, all the vaccine stuff is super disconcerting for a variety of reasons. I did talk to some investors this week who are maybe less pessimistic, just as it relates to like maybe a lot of the non-vaccine companies. I mean, I think we've seen a big basket of development stage biotech companies sort of trade up and down on the perception of regulatory flexibility. And maybe there's, we're all guessing, right? But maybe there's an argument that, this FDA could be even more libertarian for those types of companies. And like we did see in Dr. Macary's opening, the way it was covered, his opening remarks internally at the FDA talk about things in like cell and gene therapy. And so, I mean, I guess it all like these thoughts are maybe a little bit more stock specific than, again, society specific, right? Because the lack of independence for the FDA is not good. But as it relates to the sector, I don't know. I actually feel like there's more of a polarized view out there, at least from my conversations with investors, where some people are very, very worried, and they're very worried about delays and all kinds of unpredictability and stuff. Whereas there's others who think, maybe certain stocks here are on sale because of perceived regulatory uncertainty around a previously agreed upon flexible path. But if it's for X or Y severe rare disease, is it really that likely that that path will change? And to be honest, for certain stocks, I'm maybe more agreeing with that view too.
Yeah, I'll just, so we have a unique kind of venture model. We play a pretty active role in a number of our investments. I mean, literally, I'm on weekly meetings with a lot of management teams, and we also rely on a lot of advisors, consultants who work with other biotech companies. And, I'd probably put myself more in the optimistic category of what's happening at the FDA. Again, no one likes to see discontinuity, no one likes to see uncertainty. But I can tell you, I mean, there's a lot of data points we have where we've been very, very frustrated with FDA guidance. The delays, the inability to just move forward with programs, overweighting, animal tox data to, over, healthy volunteer dose exposures. And this is not unique to one division; it's across divisions. I mean, Bruce was here a couple of weeks ago, I think, talking about that the majority of their companies they go outside of the U.S. More and more firm companies are saying, "Hey, should we get clinical data outside of the U.S.?" So this predates all of these changes, and if you really look at some of the changes in the FDA, I mean, a lot of changes were made going back the last 5 years. I mean, a lot of hierarchy changes, a lot of changes at the division level. And so, yeah, I mean, this is very disruptive, and I think we've got more uncertainty. But I mean, I'll just say this, even though it was a small communication around phasing out animal testing, relying on other means, including a statement about using clinical data to allow for easier paths in the clinic in the US. I think for me, this is a good sign and signal that that there may be more pragmatism applied to doing the right clinical programs and not handicapping a lot of biotechs, because we're facing this with multiple companies across our portfolio, and we're hearing others. So again, it's only one data point on this animal testing about antibodies and organoids, and like who knows when this will be fully implemented. But if it's a signal of intent, I think it's a good development and a good sign. And I kind of wish we could all uh, you know you know go to sleep for 6 months and then wake up and just figure out where's the market, what are the guidances that we've seen, right? Who's in place at the divisions. I think Yaron said it last week, I believe, that there were some documented changes at the division level, and that's the most concerning for discontinuity. But some divisions have remained intact. So, again, I'm less the sky is falling and more let's wait and see, and let's see what purposeful communications are coming out. Tess, what are your thoughts? I mean, you guys have a big portfolio, bigger than ours, in this FDA communication on animal testing. What's your interpretive lens on that?
Yeah, I mean, I think it's really encouraging. It's actually, an area where some of our venture partners and some of our companies have had discussions with the FDA about this before, and I think we're a bit, hamstrung by the classic, feedback of, well, bring us the package and we'll let you know if it's okay. So I think the FDA has, historically expressed, openness and some flexibility on animal testing requirements, but without really specific guidance about what is required. And so, in the absence of that guidance, what are you going to do, right? You're going to do what you think gives you the highest probability of being able to move forward, which typically means that you're going to do the work that, biotech companies have, been doing for a long time. So I think it's encouraging that they're, going to think through it. As you say, I think it's very practical that they're considering this guidance. For the point on the FDA more broadly, I share some of the concerns, about independence. Hopefully now with Dr. McCary, in his seat, having a strong medical background, he's really going to be approaching, issues from a scientific and data oriented perspective. But I think the people, some of the people cuts, I think are concerning. And your point about waking up in 6 months sounds wonderful because I think that could resolve quite well. I mean, there's a real opportunity here to bring in great talent. Try and modernize. Bring out guidance in areas where perhaps the development path could be more efficient. So I think there's a real opportunity, but that opportunity needs strong talent in place to manage it and experienced people. So we actually wrote Peter Peter Kolshinsky from RE Capital and Peter Rubin of No Patient Left Behind, wrote a letter to Senator Cassidy, who's as the is in charge of the Senate Help Committee, and plays a key role in oversight of HHS to make sure that they're really living by their commitments. And I think we've been disappointed with how that's played out from a vaccine standpoint, since that was a key part of why Cassidy ended up voting yes for RFK. We're hopeful that those discussions between Cassidy and RFK are more productive in future. But we wrote a letter to him really with a view of, making the point that there's, some key employees who have been let go. I think before, Dr. McCary was even in place, and some of those employees are key to, assessing programs, negotiating the PDUFA program, managing, supporting reviews, right? I know there was press about, well, people who are, doing reviews aren't going to be let go, but those people who are doing reviews, they rely on, pretty critical roles in other departments that, maybe weren't directly working on reviews. So,
Yeah.
I think those are all things that we really need to watch. The PDUFA one was, a little more, concerning perhaps because there was also some, uh, concern. I think Pink Sheets came out with an article saying that there were these concerns about defunding of PDUFA because essentially you need the budget to put forward enough budget such that the PDUFA funding is never going to be more than 50% of total agency funding. Otherwise, there's concerns about, regulatory capture and other things. And so there's this trigger, that's kind of a trigger that you need to hit in order to receive PDUFA funding. And Pink Sheet, shared some, I guess they had a source that suggested that we should be concerned about sub-trigger funding that, like, my gosh, is, Congress going to only authorize an amount that would essentially mean, and that would be very concerning. And so having also the employees who were responsible for negotiating the user fee program leave, those are key employees that should probably come back, since that's a critical function of the FDA. So I think we'll have to watch from a people standpoint very closely to see who gets put in place, make sure that they're experienced individuals who can help keep reviews on track, keep earlier stage feedback on track. And we'll be watching that very closely and hopeful that Dr. McCary is going to be, going to be bringing some of those folks back, or at least bringing experienced new people in.
Yeah, that's great. And Peter did a great job of just clarifying this whole concern about the user fee. He posted and got a lot of pickup on that. So, pleased that he clarified that for our industry colleagues. The biggest concern for me was the project managers. They often are the true liaison informally with sponsors, and so the rumors that project managers might have been part of the cuts, that's a real glue for sponsors to get clarification in between guidance meetings, or even when there are minutes for clarification from a reviewer. And so I think that would, I don't think they're getting rid of the role. The question is are they going to maintain a good liaison role through project management with sponsors would be something to watch.
Can I, Chris, can I just pose a question to people, and it'd be
Yeah.
interesting to hear, Eric and Tess, what you guys have heard. Like, what have people been hearing from their companies about the FDA? Because, I mean, I only have a small sample size, right? We're talking about a couple weeks of, big changes at the FDA. But so far, the companies I've talked to have said that their interactions have been normal, their interactions have been timely. Maybe I haven't talked to a company where their like counterpart is completely changed, but it's just been interesting, right? And we talked about this last week. Denali filed for accelerated approval for Hunter syndrome. They interacted with their counterparts at Cedar the day before that submission and the week before. Has anyone heard anything different yet?
I definitely have, yes, and I think Paul, I think there may be a little bit of selection bias in the feedback that you're getting about interactions with the FDA, perhaps. Um, but the things that we've heard, nothing that's really, uh, terrible. But what we've heard are things like, oh, the senior reviewers aren't there anymore, right? We just have junior reviewers who are looking at this, and we got a bunch of feedback that was like very conflicting from the junior reviewers, right? Normally, you'd be able to escalate this, and you'd have someone who you could talk to, but now we don't actually have the right people with experience to escalate that to. So that was an example, right? We've talked to other companies where leadership failed to attend meetings, right? And so these meetings, like you prep for these FDA meetings forever with the hope that, like, if anything is misinterpreted or not well understood in that meeting, that you have leadership there to help resolve issues quickly. And that wasn't there, in one of the meetings that our company attended. There was another company that was going through an escalation process where they were essentially told, don't go through this escalation process because there's no one at the ombudsman who's actually, qualified to be able to help you. So, I don't think that we're getting to a level where it's like, oh my gosh, like my whole review team turned over and now I can't like proceed with this file. I mean, the FDA has, I think they're, working very hard to, help keep up those commitments. But the quality of feedback, the quality of interaction, the ability to do things like, escalate feedback that you don't agree with, I think those are all being challenged in a very, short-staffed environment, particularly one that's short of senior staff.
Yeah, and I'll just share our across our portfolio. It's a mixed bag. We are hearing a lot. They're getting that feedback. They're getting the communication right. But we've also had a situation. We know of a private company that didn't even have a pre-IND meeting, and the FDA refused the pre-IND meeting request and said we'll review it with the IND. So there's always been this perception that the FDA can feel stretched at times, and they're overworked and over busy. So now with staff cuts, I think they are prioritizing what is worthy of granting a meeting, how much attention they're going to put on certain companies. I talked about the conservatism that we're seeing, and it's definitely influencing us in terms of, hey, should we even bother requesting a meeting with the FDA given the kind of turmoil that's going on? And we're always thinking of pivoting to UK or Australia or somewhere else to keep our programs moving. But I'd say that we have this perception that maybe this isn't the time to request. I mean, we have one program there where it's justified to request a type A meeting, and we're just trying to figure out should we or shouldn't we at this very moment. So I think there is this feeling that they're scrambling and they're going to have to pray. Everybody's got the right intention, I think, at the FDA and trying to keep things moving, but I just think they're overstretched right now and can't work the way they would in a normal kind of 100% efficiency circumstance. All right, let's maybe pivot to the tariffs, and that was the news of the week, Eric, as you mentioned, and just let's talk about perspectives on that. And anything, there was Paul, you want to and Eric, you want to comment on that, and then Tess would love for you to comment on some of the pharma CEOs that are trying to bring manufacturing back as a result. But Paul, you want to start with what's your perspective on the tariffs and taxes, et cetera?
Yeah, sure. I mean, I feel like my perspective, Chris, is all the investors that I talk to don't really know how to invest within this issue. I mean, we can look at, we can talk to companies about their supply chain and, where drugs are made, where patents are domiciled. There's obvious standouts, right? Oh, IP is domiciled in Ireland. Like, we can try to do model exercises with different ways that tariffs could be calculated. But I mean, I think it's really tricky. I mean, I feel like the tariff conversation in mind, going back to what Eric was saying earlier, it feels to me it's almost like more about market volatility and just the fact that biotech, is a super high beta sector, and if the market swings, it's going to swing a lot in either direction. And I think people are having more trouble investing around that aspect of it. But as it relates to like the fundamentals, I mean, we all know it's bad, right? But beyond how to model that, I think it's tricky. I think it's also tricky, right? Because you're going to talk about companies bringing back manufacturing. But if you're a company, I mean, how do you plan, right? I mean, I think no one knows, whether these are really going to go into place and be around for 4 or 5 years, or if it's going to be chatter for the next 2 months. And so, I mean, I think, to me, I feel like the top line is just more uncertainty, more volatility. And as an investor, like, how do you play defense around it?
Great. Eric,
Yeah,
anything to add to that?
I'd agree 100% with Paul. I mean, the session we just had on the FDA, that is our industry front and center. And if the FDA doesn't get its act together and isn't able to function, we're in biotech, especially smaller, innovative companies, we're dead in the water, right? But when it comes to tariffs, number one, they only pertain to the commercial stage companies, the much larger biopharmaceutical companies, as opposed to the innovators. And number two, they pertain a lot less to the biopharmaceutical industry than they do to other industries that have much higher cost of manufacture and do much more manufacturing overseas. So, on a relative basis, you might think that high tariffs might benefit the biopharmaceutical industry in terms of having less negative impact on us than on almost any other sector that I can imagine. That said, Paul's right. I think some of the larger companies are thinking about their manufacturing infrastructure. What I'm hearing is they're much more likely to wait it out, the next 3 or 4 years, not knowing what might happen after the Trump administration. And of course, it would take at least 3 or 4 years to bring your manufacturing from one geography to another. So I don't think that's likely. I think a lot of them are looking closely at their tax accounting in particular, and also looking at their manufacturing accounting and trying to maximize the math between those two equations, either shifting IP to different geographies and or reducing or increasing the cost of manufacturing associated with different geographies such that they can have lesser P&L exposure from whatever may come with regard to tariffs. Of course, we don't even know what we're solving for yet because the Trump administration hasn't been clear on that front.
Yeah. Hey, Brad, I did listen to the Bezod interview that Matt Klein did, and there was a good nuanced discussion around pricing and what it means, where the U.S. has largely been, the high margin group, and that there could be some positive implications for, again, the worst scenario is that, most favored nation goes to the lowest price, but there's also scenarios where this could be beneficial. And I wonder if that, is the pharma companies that we're seeing, and Tess, after Brad, I want you to comment, that they're saying, hey, we'll work with you, bring manufacturing, and, Lilly, J&J, Novartis, kind of leaning into this. Maybe they view it as negotiating leverage to, protect the pricing power to some degree. But Brad, any comments on that? And then Tess, would love to hear from you.
Well, at the risk of having an unpopular opinion, I have to say I personally support the pharma tariffs. Number one, I think there is a real national security angle to this issue, and I think it's going to, like, it's not going to be a carrot but a stick that's going to solve that problem and get companies to move back here. And you're seeing that immediately. I mean, we saw it with Novartis yesterday. I think the number was like 25 billion or something. And the reality is, we, meaning the United States or the White House, however you look at it, has the ultimate card to play here because we are the market for this industry. Like, there's not even like anything that's in second place. Like, everything else is a distant third or fourth. So we have the ultimate um cards at the negotiating table. And the reality is, there are so many places around the world, like Ireland and other places throughout Europe and Asia, who make small fortunes by enticing companies to manufacture and do business there and to domicile themselves there and to domicile their IP there. And then those same countries don't pay a small fraction or don't pay at all for the drugs that our industry creates. So I think that our industry has had this coming for a long time, and I think, like I said in the beginning, the abruptness of it is, I think, chaotic, and maybe there's a way to do it more smoothly or something. But I think from an overall macro perspective, I agree 100% in principle with bringing more of this to the United States, because we are the 100-pound gorilla in terms of the market of why, what supports this industry.
Yep. Good, good,
Yeah.
good comments. Tess?
And I think, yeah, thank you, Chris. I mean, first, I would absolutely agree with Brad from just a national security angle in terms of having, more production in the United States. I think an area that doesn't get, nearly enough, press on this is the generics industry, right? Where, I think there's been a lot of shortages over time. Some of that comes from, just, so much price pressure and so much. Ex-US, ex-US manufacturing that any kind of, supply chain snafu, it can really create shortages and it can result in a real detriment to patients. So I think that's an area that I think is really important. I think tariffs are probably not necessarily the way the administration should go in terms of bringing manufacturing back for the generic sector, simply because the margins are so slim, right? And so I think that maybe there should be a bit of a different approach between branded pharmaceuticals and generic manufacturers. And I would put the generic manufacturing as the area where I think there's probably the most acute security concern and domestic supply concern. So that's kind of point number one. I think two, on these manufacturing announcements. Look, I think it's a smart, intelligent way to curry favor. Whether they actually happen is going to be another question. I think Novartis, Lilly, J&J, as you mentioned, they've all come out and announced these multi-billion-dollar investments in the U.S. I don't know if anyone remembers the first Trump administration. I think this happened, often, but there's one that I remember in particular, which was Apple, which promised, it was like, we're going to build these three big plants, and we are going to, invest $1 billion in this fund for like advanced manufacturing. And it's like, it sounds like really nice, and it creates these like nice headlines. And then, I'm sure like Apple built a bunch of plants, but like, were they just going to do that anyways? And like, they're press releasing it, and like, I don't know if the fund ever happened, and right.
Yeah.
So
Yep.
I think there's an aspect here of like, what is PR and like what is real and what are you actually going to do.
Yeah.
And to this point of manufacturing and like tax being wrapped up in this, it's like, well, you can move your manufacturing, but like, are you still going to have these issues because like your IP is like over in another country? And that is really an artifact of a time when the corporate tax rate in the US was like 35%, and
Yep.
it's not anymore, it's 21%. But how do you unwind that? It is like incredibly expensive and difficult to like unwind all of this IP stuff that's really from another point in time. So
Yep.
I think, well, I haven't yet seen any, solutions or thought on how that can happen. Certainly, moving manufacturing over to the U.S. would help with your value add that you can do in the U.S. and move some of those profits away from, Ireland or Switzerland. But it doesn't it doesn't solve the whole problem.
Yep. Well, yeah, this is another one we got to take a long-term view and see how it plays out over the next 6 to 12 months and ultimate years to see how this evolves. But so let's move to the data readouts, and I'm going to ask my co-host to be quick top line on this. We'll do it rapid fire. But there was some data, Paul, if you want to cover Lexeo and Rhythm, and then Tess, I know AAN. There's some CNS data that's come out this week as well.
Yeah, sure. Thanks. So on Rhythm, they had positive phase 3 data for their drug setmelanotide in hypothalamic obesity. I think, just the interesting point of discussion for this podcast is that for any companies listening, I mean, this was sort of a management team masterclass in setting expectations. I mean, they were very firm for a long time. They didn't wait until the last minute around a certain effect size hurdle that was conservative, to the point that I think, they really did have investor expectations pricing in a meaningful regression from phase 2 to phase 3. And then they beat that hurdle. And, in one of the worst markets I can remember, their stock has significantly outperformed and was up a lot in a couple bad market days. And so, from a drug perspective, it's an important drug because this is a really challenging population. I mean, most of these diagnosed patients had brain cancer and tissue damage to the hypothalamus, and as a result, they don't respond to GLP-1s. And the data really helped, I think, embolden that with the placebo arm having a bunch of GLP-1 patients, and yet placebo still gaining weight over a year. And so, interesting company, super interesting product. And, I think as we talk about the types of stocks that investors are more interested in this market, having a de-risked asset is a nice place to be. As it relates to gene therapy, and I would love to hear Tess and Eric, any quick comments, or, you too, Chris, of course, but just as it relates to like how public market investors are looking at gene therapy companies right now, because, Lexeo put out some data where, from my perspective, and, I cover the stock, maybe I'm biased, but there weren't really any sort of surprises, right? I mean, they're developing a gene therapy for Friedreich's ataxia. The biomarkers in this indication have noise, right? I mean, they measure frataxin protein. This gene therapy does not make a lot of it, but the argument is you only need a little for benefit. There's dose dependency, but there's noise, right? There's variable baselines. And then they also look at left ventricular mass, which is a validated biomarker. And if you believe their agreement with the FDA, going to be their endpoint in their pivotal study. Although I think a lot of this FDA guidance is getting discounted by people right now because of uncertainty at the FDA. But the LVMI data look good, right? I mean, again, the caveat is the baselines are very variable. Not all patients with FA actually have elevated LVMI. So we saw a stock move there where the stock traded down 25 to 30%. It was sort of hard to explain. It more seemed to me like it was a selling on a liquidity event versus anything, newly wrong with the data. But I also think with gene therapy right now, outside of the perceived uncertainty at the FDA level, I think there's been more of an investor reckoning and a little bit of a shoot first, ask questions later across the gene therapy space, just as it relates to what is the commercial model, or any of these companies viable takeout targets, or do they have to build a business themselves, and what does a business with no long-term terminal value look like unless you really are recreating products? And so that's not a Lexeo specific comment, but I feel like there's just a lot of overhangs in that space now. And I think the Sarepta DMD gene therapy, having the setback it did, has had a negative read through into the space. If anyone wants to add anything there.
Well, I think the only thing to add, Paul, is, I too thought the data were certainly favorable. I don't cover the stock like you do, but, to Tess's point earlier, it's an event, it's a milestone, it's a trigger, and there's no such thing as good triggers in today's market. It's bad and worse, right? So it's just a time period when companies are very much at risk if they say anything.
Yeah, I'll just say, I mean, we were investors in Cargo that was a cell therapy, and I think broadly, cell and gene therapy, even broadly genetic technologies, even if you look at Intellia's, valuation, I think there still is a big overhang there. I think the Sarepta data had something to do with it. I think Peter Marks, I mean, all of it is just it's a tough area, and it'll be. I think everybody wants to see it swing back first before they feel it's safer to jump back in the water. And I do agree with you, Paul, that the liquidity event in this environment where funds need to sell, might have been a factor as well. Tess, any comments on that, or do you want to touch on some of the other data from this week?
Yeah, maybe we can touch on some of the other data, maybe just quick hits from ADPD and AAN, and please others, jump in for anything else that stood out. I think, ADPD, we got an update from Alzion. They had their Apollo 4 phase 3 that they presented. This was an RCT of their drug that's an oral, beta amyloid oligomer inhibitor. And they were looking at ApoE for homozygotes, so people who have both of both mutations. I think they saw overall that the results were not, statistically significant. I think there was, of course, and I always want to get Eric's view on this. There was a subgroup. There was a subgroup, Eric, that had, that was the MCI. That was the MCI, the mild cognitive impairment group. So, they were looking at a patient population that included both MCI and mild. And so I think the question that they're going to have is, I think there's, they certainly have some ideas for why that is illogical that you would see that effect in MCI. And I think the question is going to be, is there, enough of a rationale there to move forward in a smaller group of patients? We know that going earlier in Alzheimer's is important, but are the results robust enough? They did see a separation in CDR sum of boxes in that pre-specified subgroup. I think it wasn't statistically significant on CDR sum of boxes, which is typically a registrational endpoint. So more to come, I'm sure, in terms of where that could go. Another update that we got was on trontinemab, which is the brain shuttle drug that Roche is developing for Alzheimer's. And I think that, data continues to be, continues to look, pretty interesting in terms of the first, kind of brain shuttle. I think, most important there is that they had an additional number of patients. If you recall, there was a cerebral, hemorrhage case that happened. I think at CTAD they disclosed that, and since tightened the criteria for enrollment, and as a result, didn't see any more of those, which was positive. And the thesis for trontinemab is really that it can get to faster plaque clearance, and with lower ARIA. And there's a few different types of ARIA, but one that we often look at because it tends to be more related to symptoms is ARIA E. And at one of the dose groups, I think the 3.6 dose group, which is the high dose group that they had, there continue to be no cases of ARIA, which is really encouraging. That's one of the reasons that the currently commercial available beta amyloid drugs have seen less uptake than maybe one would have expected, is because of these rates of ARIA that require a lot of monitoring and can also, result in, pretty, serious symptoms for a, smaller subset of patients. So those were some of the updates. Maybe just quickly at AAN, I think one that stood out to us was looking at Uplizna, which is a CD19 antibody that Amgen is developing in myasthenia gravis. And I think everyone was pretty disappointed in the data that came out last year, where they were looking at MG-ADL scores of about 1.8 placebo adjusted, which is was not viewed as particularly competitive versus Vyvgart, but they came out with longer follow-up, and that score continues to improve. And so at 52-week, it got to minus 2.8. And so I think that's, kind of showing up as, a drug that we really need to watch in that space, and certainly more competitive than, the first data release.
Great. Tess and Paul, great job covering a lot of data in a short amount of time. There's two things I wanted to highlight from folks who are frequent guests. Well, Daphne, who leads this biotech hangout, was nominated for the status list that Stat News puts out. So it's kind of like, who are the major players to watch? I have to say, I was impressed that Stat, I feel like the other side, if you will, dismisses any journalism of biotech, but I was surprised to see Stat highlighted McCary, Bhattacharya, RFK Jr., Mehmet Oz, right, along with folks like Scott Gottlieb and others. And so it showed me that hey, they do want to cover the current administration and what they're saying, and hopefully to be objective, because I think we need to keep the dialogue open on both sides to have credibility, rather than have the other side, just tune out and go to alternative media or Twitter or independent journalism. So that was nice to see. But congrats to Daphne on that. And also, there was a post by Michal Preminger, who's departing a very significant role she's played at J&J, leading external innovation there. And she's probably one of the more prolific folks out there as a champion of our industry. I don't know what she has planned next, but we all are endeared by Michal and how much she contributes on this Biotech Hangout, and just for the industry at large. So we're at the hour. Brad, I'll come to you. Any final comments either on Michal or Daphne, or overall, for going into next week?
No, of course, best to Mihal. Mihal, it should be like the mayor of Kendall Square. I feel like she knows more about Kendall Square than just about anyone out there. She gave me like a walking tour once that was really amazing. But best of luck to her, and I'll echo congratulations to Daphne on the sad thing.
Great. All right. Well, thank you all for tuning into this episode of Biotech Hangout, and we'll see you on the next one. Have a good weekend.
Thank you, Chris.
All right.
Thanks,
Bye. Thanks,
everyone.
Bye
everyone.
bye.